The Federal Reserve avoided a recession in 2024, making its way toward an economic soft landing. And much like at the beginning of 2024, Fed officials ending the year still worried about inflation. While looking ahead to 2025, uncertainty under a Trump administration hangs overhead for the central bank. For more on the next moves for the Fed, we have Serpa Pinto Advisory founder John Hilsenrath. John, always great to see you and have you on the show. Interested, John, is I haven't heard your take yet on the Fed and the recent moves they made. They cut, John. They signal fewer cuts ahead. Is that what you were expecting to see, John? And in your opinion, was it the right move?
It was what I was expecting, and I think it was the wrong move, to be honest with you. The inflation, the improvement that the Fed was making on inflation slowed down in the fourth quarter. The economy proved to be stronger than the Fed expected in the fourth quarter. And we're heading into an environment in 2025 where there's inflation risk from tariffs, from deportation of potential workers, from tax cuts, deficits. So I think that the Fed waited one meeting too many to pause the rate cut cycle. They effectively announced they were in a pause mode for 2025. I think we're going to have to see real tangible improvement on inflation before they cut rates again. I don't think it's going to happen in the first 2 months of the year, maybe by March, but I'm not expecting that.
John, I was looking at your notes, and My Chemical Romance over the past few days here has really been looking at the balance sheet and trying to get some sense of what's going to take place there. And I'm glad we're in alignment on this because of the decisions that are coming due there and the pace at which, and here you're taking a look at the Federal Reserve's balance sheet over the years and the pace at which they will be unwinding this even more. What are your anticipations there? How much more priority might this take versus some of the decisions whether or not to cut or hold?
Well, I'm really glad you asked about this because I don't think that the balance sheet has gotten enough attention in the last few months. We have to take the decision about the balance sheet apart from their decisions on interest rates. But the Fed has been winding down its balance sheet, and they've kind of been telegraphing that the pace of that wind down is going to slow this year in 2025. And the economists that I've talked to are expecting the Fed to the balance sheet to reach this steady state of a little more than $6 trillion in 2025. But the Fed has deferred a really important question, which I see as a risk to the bond market. So they're going to stop winding down the balance sheet in 2025. But what really, really matters isn't the size of the balance sheet. It's the construction of the balance sheet. It's what do they hold in mortgage securities? And most importantly, what do they hold in long-term Treasury securities? They've wound that down, but they still have around more than $6 trillion of Treasury and mortgage of long-term Treasury and mortgage securities on their balance sheet. And they have to make a decision about whether they continue to wind those large holdings down by moving them out of long-term securities and into bills. And if they do that, then that could put upward pressure on long-term interest rates in the coming year, in particular when they make the announcement. They haven't said what they're going to do. They had debates about a strategy like this back before COVID, and Powell in those debates suggested that he wanted much fewer long-term treasuries on the balance sheet. If they do that, that means more long-term treasuries in the private sector's hands, which could put upward pressure on rates.
John, you mentioned Powell there. I'm just curious, how do you potentially see the relationship evolving from here over the next year between Powell and President-elect Trump?
Well, so, Powell's playbook during the first term was to tune out the president's criticism of his action and the president's threats, and to stay focused and to say he was staying focused on the economy. I think the temperature is going to be turned up for Powell because the Fed is in a pause mode. We don't know how the president's going to feel about that. And also because if inflation doesn't get down to that 2% target, then this new president might be looking for someone to blame for sustained high inflation. and the man is going to be sitting right in front of him. It's going to be Jay Powell. So I think there's going to be discord, and Powell is going to keep his very stoic tone and try to tune it all out. Let's not forget, Powell's term is up in a couple of years. I think, frankly, that he can't wait to be done and to head off into the sunset.
Yeah, I'm sweating just thinking about the temperature being turned up between Trump and Powell, especially come January here. John, just lastly, who do you think is most likely, especially as you have other positions and you're going to have some changing of the voting members as well coming forward? Who is Trump most likely to try and put in any of those new and open Fed positions in order to then potentially fast track them into being the next Fed chair?
Well, let's talk about the Fed chair. And actually, frankly, for the governor positions, too. What we've learned in this cycle of nominations that the president has made is that you really don't know. It's really a moving target. So I'm going to start by saying that. I don't know. We can give you a list and we could do our guessing. But it's the two Kevins that people often talk about. One is Kevin Warsh, who got an interview with the president, former Fed governor, got an interview for the Treasury secretary job. The president has now passed over Kevin Warsh 2 times. The other Kevin is going to be sitting right next to the president in the White House, and that's Kevin Hassett, who is the chair of the National Economic Council. And I've got my eye on Kevin Hassett. Kevin Hassett worked as a Fed staffer decades ago. He ran President Trump's Council of Economic Advisors in his first term. He has a close working relationship with him, and he has some comfort level with working with the president, some might say managing the president. So I think Kevin Hassett is a guy we have to keep a close eye on.
John, we are always lucky to have you on the show. Thank you for joining us.
Next time, I hope to be right there on set with you guys.
I hope so too, John. Happy holidays.
All right, thanks a lot.